obviously respond and answer questions, and I'll obviously still recording it, but hopefully in this way we manage to keep you guys online for the live session. So first email, there's only a few again, usual suspects sending it through, and there's still quite a few of you not. That's okay. I don't need to see your analysis, but you know, it's a good idea to be able to get some feedback to see how you're performing. So this one is just highlighting the fact that it got to the target on a phase 1 trade. Looks like moved the stop only twice, which is after this reversal bar, and then 2 consecutive buy bars. So that was well managed and hit your target, which is great. It's congratulations. So pretty happy with that. The next one we're looking at is the pound Swiss. Okay, this is the daily chart. Seems to be in that channel reasonably well. Doing a bit of a pullback. There is a ring low, which is off the 50%. Is it? Wow, it's pretty good. Momentum, yeah, it did get back down to the lower end of the scale. Buying the pound. Look, I'm not against buying the pound. I am against buying the pound against the cable. Sorry, against the US. I just think it's going to sort of really struggling to get through at the moment. But you know, what I'm talking about is, you know, momentum's already pretty high, and there's all this resistance here. I don't see the cable it might come up and make a higher high, but it's not going to carry on too much. Is why I'm not looking at buying this ring low on the cable, because your risk reward is severely reduced. You're going to be risking, say, 80-90 pips. You're going to get 80 pips or 160 pips. Unlikely when momentum's this high. That's my reasoning for that. Pound Swiss, similar sort of price action. Yeah, okay, it's back to the 50. You might get a winning trade out of this. Will you get 1-to-1? That's debatable. 100 pips, so you're going to get 200 pips out of it. According to your chart here, you're going to get to the 1.618, so that's a reasonable risk reward of where's that? 2.5. Yeah. So that's a pretty good bullish flag. Yeah, that's a good pickup. That's a reasonable assumption. Pound, look at the lower time frames. Yeah, you could. You know, the 4-hour might be giving us well, it's certainly trending, and you could look at the 1-hour potentially as well. This is a bit choppy here, but yeah, if it's over, you know, looking at that, we're not yet certainly still in a strong uptrend, but not yet oversold. Have been, but there's a little bit of a pullback. Yes, you could look at the shorter time frames for potential trade in there. This, not ideal. You might look at this ring low, but you need to have a reasonable support resistance line. And I've got this one from the monthly, coming back to this high here, this low here, and that's the resistance that's, I think, stopping this from carrying on. Even in the shorter time frames, you'd want to see, a clear break of that, which it hasn't done, and a retest of it, and it hasn't done that yet. So that'll be my concerns again on the shorter time frames. But back to your pound Swiss, your analysis is sound. Risk percentage is going to be reasonably small. because against the Swiss, it's the euro pound upside down, isn't it? The euro pound is similarly positioned, and there's potential that it could continue down. I prefer to, personally, I prefer to see a reasonable pullback. I know you've got that 50%. Well, the euro pound hasn't got the 50%, but I prefer to see this area, these lows, the 50 EMA, the 50 fib being tested before jumping into it. This one's slightly different, obviously, because of the Swiss, but it's closely correlated. And yeah, you've got to come back and tag the 50. Yeah, should be interesting to keep an eye on that. 1/4% I think is reasonable. Yeah, all good. Okay. You guys still with me? You're still on this? Yeah. Okay. It's hard to catch a trade when they haven't been pulling back, and if you don't get it at the very beginning. I was wondering if looking for flag patterns might be the way to get in. Look, we went through them in the course, and they're certainly valid chart patterns, and something that you can certainly look at as an addition. And I've closed it down now, but that the pattern we just saw on this pound Swiss is a reasonable thing. It's, I mean, if we put the 20 on there as well, if we put the 20 EMA in there as well, then you could argue. I think the 20 EMA is a weaker signal, but you could certainly argue, well, hey, it's running along the 20, yeah, and that's a valid argument. Cycling along the 20 in a reasonably strong market, that you can make that argument. But you'd want to note it in your checklist that, hey, we understand the 20 is a weaker one, so I'm not going to risk as much capital behind it. Yep. EuroCAD had a few too, and not that I took them. Yeah, look at the EuroCAD is something I've been trying to get on. I managed one trade in this whole downtrend. I caught this move here on the 4 hour, and I've been waiting to get back in again. No, there's no divergence here. That's 18 and that's 17, but I have been. We were looking at this as divergence, but it just hasn't given me an opportunity, and I still believe in the trade. The CAD's got a long way to go, and the euro is definitely weak and going to remain on the weaker side. So there's going to be another opportunity to get in this, but yes, this is more like a good strong move, cycling along the 20. Yeah. Okay, so the next email. Yeah, trade with the trend. You'd rather trade with the trend than against it. Absolutely. You certainly make a lot more money doing that. Strong level of horizontal resistance. Horizontal resistance. Mark strategy, go long on the 27th of June. That's today. On the Kiwi, go long. The Kiwi is not retraced, however, to be getting some good support off the horizontal level. I'm not sure. Oh, you mean strong level of horizontal support? I'm not sure where you're seeing that. You've done a Fibonacci, okay, and I presume this support level is what you're looking at. Interesting, the 2618 is only 4 pips from the all-time high of 88.42. Yeah, 88.42 is the all-time high. Well, not all-time. Well, yeah, in our generation. So that'd be strong resistance, I would say. If the Kiwi gets up there. 88.42. It's only up. There's still enough room in the momentum to suggest that it could get there. As I said, it's only 60 pips away. So potentially could do it. Personally, I prefer to be sort of buying from a stronger position when RSI is down the lower end of the scale and you're coming off the 50. This is range bound and was range bound, or still potentially is range bound. I tried to short it off this low here yesterday and got nailed for my efforts. That's why I don't trade ranges all that often. But you've got certainly a lot of action, price action across here. Yeah, let me know how you go with that one. Risking 0.2%, that's good. It'll be interesting to see how that fares. Alright, can I ask you what your thoughts are on the strategy? Mark uses the 1 bar to calculate the entry signal, stop loss and the targets. So risk reward of 2 to 1 is good, I like that. Entry at, so he's basically getting in on the top of this bar and he stops 2 times the ATR under that bar, or is it just underneath that bar? And then in the target is 2 times ATR and 3 times ATR. Look, I like that. I like using the ATR to manage your stops. It's something I introduced to people in the sniper when I was teaching UW, but it's an effective method of managing your trade. My concern is, like, I don't have a problem with it. It's just, you're not taking into account how stretched this market is, or it doesn't seem to be taking it into account. But 89.12, don't know about that. I just, with the momentum on the high side, I just don't know if it's going to get to 89.12. To me, that seems like a pretty ambitious target at this point. If you're looking at something like, I don't know, that's euro dollar, taking this short, the momentum, you can see how much room you've got in the momentum to go. You see what I mean? It's like, even in the Aussie, the RSI is at 61, so there's a lot more room up on the upside to potentially hit 95. As the Kiwi is, you're already in the 70s. The momentum is not taking that into account, and that'd be my major concern about this. But otherwise, yeah, I think it's using ATR to manage your trade is a good thing. Yeah. Okay. I've got a question on the CAD Sing. Again, the first email we saw was that it hit the target, and the question that's come in is saying, well, I had my target, had his target just underneath the 1.618 extension, and he got taken out of the trade for a profit, which is fabulous. But now he's second guessing his trade in saying that is it better to, when it's on a good run, better to remove the take profit and let it run, and just trail your stop as per the rules. Um, I originally targeted the 1.618, but could we aim higher? There is horizontal support or horizontal resistance at 1954, but this is well beyond the 2.618. RSI is overcooked now as well. Yeah, look, I try not to second guess the trade after you've done it, especially if it's a winning trade. If it's a losing trade, you try and work out why it went against you and what the parameters were, so you don't repeat that. Nothing wrong with having a target and getting it. And as I say in class, is I don't mind you having targets. It's good to take profit when it's there, but don't then second guess and say, oh, you know, or even halfway through the trade, go, oh, I'm going to move this out. Or whinge that you've actually made money because you're presented with a similar thing. You shouldn't be looking at that going, oh well, last time it did this. So what you ideally want to do is say, well, I'm going to target the 2, I'm going to target the 1.618, and you will get the momentum overcooked at the time that these happen, and then you'll get a bit of a pullback. And CAD Yen is another one that I took, and it's, I put my stop under this this high test bar because the momentum was overcooked and we have a high test, and so I got taken out. It was a profit, but that's something I'm not going to complain. It may even make higher, but it's unlikely when momentum's so stretched. With the CAD Sing, you've got momentum up here that's unlikely to get to the 2 at this point. So you either, when you enter the trade, you set the trade up, you say, well, this is my target and I'm going to be happy with that. If this target coincides with a previous high, such as a horizontal level, well then yeah, that should be your target. If there's no horizontal level until you get to 2, then perhaps 2 should be your target. But you set that up before the trade, you plan the trade, and you trade it, manage it to the plan, and you stick to it. Okay. And then you don't second guess yourself. Here you had a great result. It should be, well in the order of 2 times your risk or thereabouts. Risking 60 pips, you walk away with 200, so that's about 3 times. So you should be happy with that. Yeah? CAD Yen, can you show us how you got in that as a strong resistance at 94? Yeah, it was. I had effectively a breakout trade at 94.15. I got in. I think it was on this day here, or it might have been this day here that I got in. 94.15 was my entry, and yeah, I didn't. My target was way up here somewhere. But it didn't get to target, and I trailed my stop to just underneath that. As I said, I'll go and see if I can find the history on it. Oh no, it's the wrong account. It's not my account, but yeah, that's where I got in. So I got in here, 94.15 as it broke through that, and as I said, out over here underneath that high test bar. Okay, we've gone through that. Next one is Euro bearish flag formation, Euro Kiwi. You do seem to have a lot on here, a lot of information. I find it difficult to see what you're looking at, and I'm sure you would too when you've got all of this on there. It's hard to see where price action is. You should, if you right click on the chart and just remove and things like that, so it cleans it up so you can see what you're actually looking at, and then you can put them back on again as you see fit. See, I can't see the flag formation that you're talking about. bear flag. Euro Kiwi. It's well overcooked. And yeah, serious divergence here. Support. Yeah, you could say there's support around here. Somewhere, there's lots of support down here. Bearish flag formation. Unless you're looking at this consolidation and it's a breakout of that, I'm not sure exactly what you're seeing, and it's hard to tell from this. But you're getting in at 54 and your stops at 57, so you're looking to go short. You know, I don't mind you having all these momentum indicators, but just stick to the one. The last chart I looked at yours was you had the ATR up, which is okay, but now you're looking at MACD. You know, there was hidden divergence. You see the blue lines here from that high to that high, but now the momentum is looking like it's, you know, there's divergence here. You can see these histograms are rising as prices continue to fall, so I would suggest that this is pretty much done and dusted, this move. If you put our extensions on, we can see 1.618 is holding it up. Isn't that funny how that's across there as well? What about the hook? I don't know what the hell the hook means in what's the hook? What, that hook there or this hook here? I don't know what that means. I don't know if it means anything at all. But if you, it's just, I'd say the hook is just following the fact that it's closed on the lows in 2 bars. But what I see interesting is that it's, you know, whilst you're lower here, you've got price a lot lower. The RSI is not. The hook confirms the trend apparently. Okay, well, I doubt this is going to continue south. Effectively, what I see is the Kiwi struggling to continue on, but the euro I see is, you know, still got a bit more upside. I'm sort of looking at getting short the euro around this low, this high here, and this area here is where I want to get short, and I expect the euro to get up there in the next couple of sessions. And that's, so to me, I'm slightly bullish euro. Overall I'm bearish and I want to get short, but for the next couple of sessions I see more bullish side, upside on the euro, and the Kiwi I think will struggle to continue to do so. So with that in mind, you know, I see this, you know, heading back to here. Yeah, so see how that goes. I'm not sure what the strategy is, but it'll be interesting. 0.5%, I wouldn't be doing that. I'd be doing less than that. You were triggered in. How'd you get triggered in? It hasn't made a lower low yet. Or did you went in underneath this low, maybe? It says your entry was 54.83. I don't know why you got that price. 54.83. Yeah. Yeah, perhaps 5 pips below the long bar down. Did it make it 5 pips below that? 54.88. Oh yeah, it has to. Doesn't look like it there, but right up. Oh yeah, well and truly, yeah. Okay. Should you get out? You've planned the trade. I'd hate to sort of talk you out of a trade that you've planned, because, you know, I'm not always right. I'll be the first to admit that. That's it's your call. If I get into a trade that is clearly wrong, I do tend to get out of it as soon as possible. But I also do it within my rules. So if this is a daily trade, then I'd be looking at sort of waiting for the end of the day, and seeing what the market's telling you. This entry or this trade plan wasn't obviously one for under the prop rules, and so therefore the strategy that you've employed, you should manage it under that strategy rules. So what your exit strategy is based around that, I don't know, but you should. That's come out of there, puppy dog. You get electrocuted. Um, you know, you'll get. You should manage it under those trade rules. I'm not sure what they are, but I hope you've got good, strong rules around it. Worst case scenario, maybe reduce instead of 0.5, close half your position, and then manage the remainder of it and see how that fares. It's a line ball call for a trader. Okay, Euro pound bear flag. Yeah, well, this is the pound Swiss that we looked at earlier, just upside down. Weekly now, phase 2 long. May explain test bars at the moment. Needs to test EMA or cycle above it. Bearish flag formation. Okay. The Euro pound bearish flag formation again. I think it's attempting to do a phase 2, and you'd expect it to be coming back up to test these lows around here. That's what I would be expecting, and if you in here somewhere is where I'd expect it to get and look to get short. If you remember in the course, the flag formations that we're looking at is that you it's effectively a breakout trade, so you're just getting short around here somewhere, and your stops above the top side. I'm not sure if that's what you're looking at. Getting short at 80. Well, no, that's in the middle of it. Oh, sorry, 79.60. Okay, yeah, that's better. Sort of getting short underneath the bottom of the flag, and that's a better risk percentage of your capital. Okay. MACD hook path teaches that as an entry. Okay. Well, it could be valid. I don't know. I've never heard of it or seen it, or even considered trading it. Reduced risk placed, but it's seen support tested and head and shoulder reversal pattern. CAD Swiss. Okay, that's the Euro CAD. It's running higher highs, higher lows. Above the moving averages, no. Levels of resistance, no. Fib retracement, no. Score 0.2. CAD Swiss. Weekly is fabulous, isn't it? Yeah, you don't have again, to me it's these areas here. If you're looking to buy, you want RSI down at 50 or lower. Buying it when it's up here, I mean, how much further can it go? Yeah, I know these crosses can at times go well beyond overbought, oversold, and still, such as this period in time here, well overbought, oversold, and still carry on. You know, got oversold territory here as it broke through this low, and then obviously managed to put in another 200 pips. You know, that's that can happen, but it's a lower probability than if you're looking to take it from when the market's down here. So to me, this, you know, I would not be looking at this. It's like the Euro CAD. I do want to be in it, but there's no way I'm going to be buying into it now. Yeah, so what have you said about RSI convergence? Yeah, support of EMA. Yeah, so a bit of a resistance here. No, not really. Yeah, I think this is reduced risk. That's good. I think you're really stretching it at the long end of the scale there. Okay. Could you let me know euro dollar short? Look, you got your fibs right. It hasn't really come back to the 50. 36.44. Lower highs, yeah, below the 50. No, you're not below both of them, correct. EMA resistance, horizontal resistance, bearish price action. It is a ring high, but it was a bullish bar. Well, not bullish, it was a buyer bar. Yeah. You know, more almost a test bar, if not it was a test bar. And I just see this as still having some upside left, and I'm looking at the resistance being, you know, 30 points higher than what you've got of that 36.70 area, and that's where I'd be looking to get short. Being on a Friday afternoon, there's a little bit of German CPI out tonight. ECB's next week. I just don't. I mean, technically it does set up, and it's about an 80 pip stop if I remember, 90 pip stop, somewhere around there, and that's reasonable. RSI is certainly in the right spot. I just don't know if you're going to get it. You know, you could place the trade, and there'd be nothing wrong with it. I just don't know if you're going to get it. I don't think you are. I think the price has got a bit more upside left in it. Nothing wrong with placing the trade for that, but yeah, I reckon you're not going to get it. I don't think it's going to make a lower low today. Okay. Attached 2 screenshots of the yen. Yeah, look, I'm still battling with these guys as to their lot sizing. It's the rand versus the yen. All yen crosses are supposed to be 2 decimal places. The fact that these guys are now doing the 4th decimal place, see, as their calculation, meaning that this is a 130 pip, 40 double O to 200 and something pip spread on the rand yen. I think that's ridiculous. And yen crosses should be the 2nd decimal, so this should be 44 to 63, which is a 20 pip stop, or 20 pip spread, which is far better. But that's my contention with them, and I'm still arguing with them over that. Argued with them on the peso. There's the fourth decimal, and it should be the third. And they still stand by what they're doing. So look, if they're calculating it off this, and therefore your P&L is going to be based off this, then you should calculate your P&L off this as well, or your risk. Because when you trade inside AxiTrader, then you're going to get AxiTrader prices and AxiTrader spreads and AxiTrader P&L. So therefore you should trade accordingly and structure your calculations based on AxiTrader's spread, which is fourth decimal in the ZAN Rand Yen. You know it's the fourth because they do this. The larger buttons here. You go to something like the Euro Kiwi, and you can see fourth decimal. Aussie dollar, fourth decimal. Dollar Rand, dollar Yen. Dollar Yen, second decimal. So do your calculations accordingly. This thing, which they sent out, the next gen, much of a muchness as to everybody's long the dollar CAD, but it's shitting itself. So everybody's long Aussie Kiwi, but it's shitting itself. So everybody's short the Kiwi, but it's rallying. So everybody's short the pound and it's rallying. So I'd take this with a grain of salt. In fact, so much so you can piss right off. I have a question. Can you talk a little bit more about breakout trades and trading? Look, we discussed it in the prop course, or the platinum course. Sorry. When you see consolidation like this, then it generally, when it does break, it breaks aggressively. And it's, in terms of the course, we look at it in the platinum course at the on trading these as a breakout, and I've always advocated that the test, trading the retest of them, is stronger. So when I traded this, I only put a small amount of my capital on it as a breakout. The inflation report came out of Toronto or Montreal on this day, which showed Pelosi was well behind the curve. That's not surprising. Central bankers generally are, and there was a bit of an opportunity there. And in this consolidation area, you prefer to you can have an opportunity on the breakout. A lot of breaks are false though, like this one. And in the retest it failed, so you need to, it's more ideal to be trading the retest, and as the momentum burns off, you expect the market to come back and retest this level, and that's when you find the opportunity is trading the retest. And we've just got the 50 crossing the 200, which is also another signal some people take, and so I expect these highs to be tested over the coming course of next couple of months or weeks. I hope that's sort of cleared it up. Basically what I'm saying is they're not that higher probability to trade breakouts, so you reduce your capital at risk, but when you get the retest, that's the stronger one. The pound is just powering again right now. Just no stopping it. Although I suspect Carney will try. They got their current account this afternoon, so that'll be interesting. Yeah. Okay. With the breakouts, do you place a pending order before it pops out, or do you wait for the bar to close above the level first? With the breakouts, this CAD yen, I had it sitting at 94.15 for some time. Identified this effectively 9400 as the resistance, and had it as a buy order. I think I placed it above this order here, and just left it in there, and my stop was underneath that, and that's the way it eventuated. That it broke out, and on this day here I got filled, and then I only moved my stop once, and that was to underneath this. I think when this bar happened, I think I might have moved my stop to break even, but yeah, went there. He also took this. Cool. Well done. You might still be in it. I don't know. With this divergence, I think it's probably best that you start looking at locking profit in if you haven't already. I like the idea because if you wait too long and it gets filled with news, you can get slipped. Yeah, on the news announcement you can get slipped, but at least you're in it. Yeah, you got stopped out in profit. Okay, nice. Yeah, happy days. Alright guys, that was a good session. You all managed, without using the webinar to record, you all managed to stay online. That's good. And I've got this other software program recording it, so I'll put that up. Next week there's nothing out on the Sunday. Is there anything out on Sunday? Yeah, we've got UK GDP and current account tonight. Nothing out on Sunday, but next week we have the end of the month, which will be a bit of window dressing. Some hedge funds and the like to make their portfolios look good, so they close positions and window dress. RBA on Tuesday, and European ECB meeting on Thursday. Because it's July 4th holiday on Friday, Forex calendar is saying that the non-farm payrolls is actually coming out Thursday night. I've never actually heard of non-farm payrolls coming out on a Thursday night, so that'll be new for me. Not to say that it's not going to do it, I just don't think it's likely. They'll just release it the following Friday. Non-farms on a Thursday night I just never heard of that. So, yeah, a couple of central banks meeting and some good data out next week. Otherwise, you guys have what days are the webinars next week? Oh, you haven't heard from K2A yet? Webinars, right. Webinars for next week. June 30, July 1st, July 4th. July 7th, July 8th, July 9th. Then I'm in Sydney, then I'm in Perth, and then so that's why there's a big gap there between the Q&As. I fly back to Sydney the day after that, and then I can fly to Perth, and then we're back on board with webinars on the 25th. So they're the dates for July. Okay. Alright guys, I shall 9 PM. I think that's 9 AM. I'm not starting a freaking prop course at 9 PM. Yeah, all that. Right, I shall see you on Monday. Have a good one.